Adam Jonas of Morgan Stanley has dropped a new note on Tesla stock. This one has a variety of comments, including for the first time an actual valuation of TeslaBot, and they even calculated the impact to the present value of the stock. How much is worth discounted to today's Tesla stock price? First, as they've been saying for a while now, not only do they see Tesla not just an auto company, now with the Trump win, they believe this will help accelerate Tesla's path beyond autos. Second, we'll review the valuation model that Morgan Stanley drafted that shows they see Optimus having a present value of $485. Having said that, they've not yet included that to their current price target of $310. Baby steps, I guess. Third, after conducting a comparative analysis of Tesla Semi and existing heavy-duty electric trucks, Morgan Stanley sees Tesla as a major threat to truck OEMs worldwide. And finally, they believe that with Elon Musk's foray into politics, they have a bull case of $500 for the stock. We'll walk you through all of that. Joining me is Hans Nelson. He has his own YouTube channel called Hans C. Nelson. Follow him on X and on YouTube. Thank you so much, Hans.
Thanks for having me, Herbert.
Morgan Stanley, Adam Jonas, they come in, they seem to be ahead of other and institutional analysts when you think about their research. But then when you go back and look at their the actual stock price predictions, it's head scratching a little bit with just $310 as their bulk or their base case and $500 for a bull case. Lots of interesting notes here. Let's start with this one. So they said that Trump winning the election will help accelerate Tesla's journey beyond autos. They have shown this table, this graphic for quite a while now, and they, one of the first to start drumming the beating the drums, that Tesla is not just an auto company. You can see here, there's vehicles, there's charging, energy storage, solar, lithium refinery, battery cells, service and collision, insurance, full self-driving, robotaxi, and of course, AI compute and Optimus. What's your thinking? Do you think that the Trump administration, the Trump win, actually helps Elon and Tesla to accelerate non-auto businesses?
Well, I certainly don't think that the Trump administration is going to be as hostile to Elon as the Biden administration has been in the specific context of lawfare and doing things that just interfere with Elon's ability to get things done. Other people will point out, well, hey, the IRA was a Biden-Harris bill, and there's a lot of stuff that's actually helpful to Elon, and that really, I think, kind of illustrates a point of contention between different philosophical parties. If you think that government putting the hand on the scale in favor of your particular company that you care about in a positive way through economic means, by whether it's stimulus or whether it is leading in investment, those types of things, then that has a lot more weight for you. But if you think that the problem that comes along with is as big as the benefit that you get from it, and that really what you need is less regulation and less, especially these lawsuits that have been filed against a number of companies, then you look at the Trump administration and you think, well, I don't really care about them incentivizing us to do the things that we were already going to do. I just want them to get out of the way in all the other areas. And I think that's kind of what the market overall is saying, is that they place a lot less value on the IRA than they do on cutting through a lot of the regulatory nonsense or a lot of the lawfare nonsense. And as long as Elon is given the room to operate, I think that does help to bring forward things like robotaxis. If the regulatory path to get robotaxi approval actually gets to be clearer under a Trump administration than under a Harris administration, then I think that does a lot more for the overall story of Tesla than do they get federal tax credit for batteries or for EVs sold. And in that sense, I think that Adam's probably right. And the other thing that I would point out here is that Adam, he loves this ecosystem concept, and he thinks about it in every one of his notes, almost has a graphic that looks something like this. And so I'm not surprised that he's commenting on this fact, and I appreciate that he's one of the only Wall Street analysts who actually kind of sees the bigger picture as far as all of the resources at Elon's disposal and in Tesla's disposal to drive kind of anomalous new business outcomes that don't fit inside the traditional silos of the legacy companies.
Yeah, exactly. Think good point about the network, looking at the ecosystem, and Morgan Stanley does a good job about that. So yeah, this is interesting, right? Does it actually increase the chances to go beyond autonomy? That was, I still scratch my head. I've seen so many institutional analysts last week say, "Oh, the Trump win means that there's going to be less regulation on robotaxi, and therefore I'm going to raise my price target." And I'm scratching my head because before that, a few of them said the reason why Tesla's not going to succeed, or I'm not going to put in the autonomy number, is because of regulation. No, almost all of them said it's not ready. It's not going to work for till 2040. That's what they said. But that's interesting.
Well, I mean, this is the
I'm not.
one of the things that Trump does have somewhat of a history of execution. There were not a lot of things that he did super, super well in his first term. I think he was fighting a lot of stuff. But there's two things that you can say that he absolutely did that I think most people can agree on. One of them is he didn't get us into any new wars. The second one, and I think the one that the market loves more than that, is the fact that he really did go on a significant deregulation campaign,
Mhm.
and they achieved a number of those aims. And so I think people are extrapolating that forward, that if he in his first term
Yep.
was already able to be somewhat successful in that arena, and he has made it part of his major platform for the 2024 term to go on an even bigger deregulation campaign, then they think that, hey, we're going to handicap and say that that's probably likely to happen.
The big news here, I think, is the bot. Here's the first time Morgan Stanley has actually modeled a valuation for Tesla's Optimus bot. Okay. This is great. We've been waiting for these institutional analysts to finally start modeling it, right? We've got ARK Invest started talking about it, of course, but it's rare. In fact, just the last several months, many more institutional analysts are talking about robotaxi after the 1010 event, after the Robot event, but few would mention the bot. So here you go. This is it. Not but of course, this is still not part of the current price target. But they just played the game and said, okay, if there is a humanoid bot market, the present value is $485 per share. That's how much it would contribute to today's stock price. That's over $1.75 trillion just on the bot out to 2040. So, net discount value. Can you explain this table to us a little bit more?
Yeah, it's interesting. So what they're saying there is they're estimating in 2040 that we'll have 174 million participants in the U.S. labor market, and that Tesla's share of humanoid penetration in that labor market will be 5%. So that means that we'll have 8.71 million bots in 2040, which seems preposterously low.
Mm-hmm.
Uh, but that the utilization on hours per week of those bots is going to be 70%. So you're going to get 100 and say, call it 18 hours per week of useful labor out of each bot. And you're going to get paid for that labor $10 an hour. So
Mm-hmm.
each robot is able to make whatever
Down here.
$1,180 per, well, I'll just say per week. Yeah, you're able to
Okay.
generate well over $1,000 worth of revenue per bot.
Mm-hmm.
And then so they do some math in the background to say, okay, what that totals up to in a year. So if you have, a year's worth of wages for 8.71 million robots, then you get to, that is 532 billion with a B, $467 million worth of revenue in 2040.
Mm-hmm.
Then you're saying that they're going to earn a margin on that of 40%. So this is where, like, I think the number of bots is probably going to be much, much higher.
Yeah.
I don't know that the EBITDA margin is going to be that high though at that scale. So maybe this kind of works out. So then they say that, the EBITDA earnings there are going to be over $200 billion. And then if you put a multiple of 30 on that, that gives you a value of almost $2 trillion in 2040. And I didn't do the math to see what's their discount rate to bring that back to the present. Like they're saying a net present value of almost $2 trillion. So I don't know, like 30 on two, I think it's a discount rate of like 50% roughly from 2040 back to here, something to that effect. Cause I think we're looking at well over like 3.5 trillion on that. If you did the 30 times 212. But anyways, all that to say, they're saying you're going to make a ton, trillions and trillions of dollars worth of enterprise value in 2040. And then we're going to apply a discount rate back to today and say that you get $485 per share on that value. So that means the bot business, according to this model, is worth more than the present value of the entire Tesla company today by a wide margin. You know what the price today is, what, 350, something like that. So like another $135 more per share just in bot value today than the entire value of the company. And the net present value of every single humanoid robot is over $200,000. So yeah, that's it's an interesting napkin math exercise. Like I said, I think that the number of bots is way low. Maybe the margin is way
way
high.
too low. No, but it's way too low.
Yeah,
like
and I
in
think
2040, there's only 8 million bots. That's
I
crazy.
think we'll be in the billions of bots by 2040. And so then, if you multiply the number of bots by 1,000 and you cut the EBITDA margin percentage by, a factor of 10, you're still into hundreds of times more value than he is suggesting here. Like if you say that you have a 4% EBITDA margin instead of a 40% EBITDA margin, but you talk about 8 billion bots instead of 8 million, then
the thing
crazy.
That's missing though is the discount rate that you said, or not the discount rate, but the chance that this is even going to exist. The people who don't, Søren Basher did a fantastic statement when I interviewed him recently. He said the people analysts who don't value bot today because they don't know until it's actually in sale, they're giving a 0% chance that the bot is going to happen.
Yep.
And that's irresponsible. Now you can say this, when you say that, it's going to be 200
depends on how conservative
bots,
you are. Like,
yeah, but you should at least give, let's say, a 10% chance that this will happen. And if you did, it's not going to be 8.71. It's going to be a lot. So the fact that they gave it 8.71, they're almost kind of giving it a 10% chance that this is going to happen.
Yeah.
Or 20, you know what I mean? So that's fine.
Yeah.
So even if there's a 10% chance that the bot's going to happen, you should still already add $485 to the stock today.
Let's zoom out now and talk about, the opportunity that this is for retail investors. You can see like Adam Jonas is already out on the edge beyond where most of Wall Street analysts are in relationship to this modeling, this idea, thinking through the valuation of this company in this way. And if basically what the street is saying is that they are 100% assigning zero value to the bot business. And if you as a retail investor think they're full of crap, and that there's a lot more value than zero in the bot, then that would mean for you as an investor, not financial advice, but that maybe there is an arbitrage opportunity for you to buy Tesla at a valuation that assigns no value to the Optimus bot instead of a high value to Optimus bot. And it's not, it's not really no value today because Wall Street's voice isn't the only voice in the stock. The percentage of the stock that is owned by retail is high. And I think those retail holders actually assign a much higher value than zero to this. And so part of today's valuation does reflect the value that retail holders are baking into the stock, but they're up against also a large base of institutional owners who place that value at zero. So just an opportunity, a market mispricing that
it's okay.
appears to exist.
Yeah, baby steps. They're talking bots now.
Yeah.
Morgan Stanley is. So now you're going to start
Mhm.
hearing, the next guys talking about the next guys, and eventually it'll be like lemmings. They'll all jump and start doing it.
Yep.
So here's the thing that they're also talking about: Tesla Semi. They did a comparative study, and Eva Fox from Verum News, follow them out, verum-news.com. She's great. She did this article. Tesla Semi is a threat to OEM, says Morgan Stanley. So Morgan Stanley conducted a comparative analysis of the Semi and existing heavy-duty BEV trucks, and they expect the Semi to offer a competitive payload, creating a highly efficient, long-range, fast-charging, software-controlled Class 8 truck. And they say this poses a threat to truck OEMs worldwide. They believe that Volvo is the best protected OEM in the industry thanks to its development of electric city buses. Tesla Semi has outperformed competitors such as Freightliner and Volvo. PepsiCo's Tesla trucks log significantly more miles per day than any other truck. One of the semis covered 1,000 miles in one day. Superior efficiency, extended range, lots of other benefits, superior to current offerings from the traditional OEMs. It could be about $250,000. We don't know yet what they're going to offer, but it could be significantly more affordable than its competitors can offer. So it's charged for similar models. So they also say that Tesla could take advantage of their battery production. It's going to play a major role in winning the market. Yeah. So what do you think? What you're thinking about that Semi and their comments here?
Shocker. The Tesla Semi is going to be as much better than legacy trucks as the Model S was in 2012. Like, duh. Who could have seen this coming?
Yeah.
And Bill Gates obviously was one of the people that
Right.
bought into the no, that can never happen voices, but he was talking to all the people that were failing at making trucks because they didn't have the ability to do what Tesla does, and that is to vertically integrate the production of the entire vehicle from top to bottom, including all of your powertrain but elements, but all the way up to every way that you use that energy, make it more efficient. Like, I guarantee you, none of these legacy OEM trucks has an octo valve equivalent. That octo valve is a big part of what it takes to have efficiency. If they're not approaching their thermal management system with the type of engineering intensity and freedom that Tesla does, well, then they're going to be way less efficient. And then when you multiply that by every other major system in the truck, then you get something that just performs way worse. And that's, like there's still no legacy car companies who can even execute on making an electric car that is as efficient as Tesla's. And these legacy trucking companies are just as flat-footed, if not more, than any of the legacy car companies. So yeah, like this was, completely predictable. Obviously it's taken a little bit longer to actually put large volumes of these on the roads than we had hoped, but it's another example of Elon making the impossible possible just a little bit late. And the point about the battery things is spot on, that a huge important piece of getting Semi to work is super high quality, super high power batteries, and their ability to produce the dry electrode process 4680s out of Austin and scale those to large volumes and large quality, get the yield up, all those things. Like, that's a super hard problem, and really that's the bottleneck for Semi, that we still will not see Tesla ramp Semi to large scale until the 4680 bottleneck is completely eliminated.
And then the charging. If you're going to partner with a trucking company and you're choosing Volvo or you're choosing some other electric vehicle trucking there, you need to have charging networks.
Yep.
You
Which
need
was
to
the same
have
challenge that the Model S faced in 2012. And Tesla had to be proactive and go out there and build out the charging infrastructure ahead of building out the fleet. And so,
Who are you
you
gonna
got to
trust?
see that as well. Yep.
And then what happens with robo trucking? Are you going to pick, Mercedes? Are you going to pick Volvo? Do they have plans for eventually turning their trucks into robo trucks? And then there's the
Well,
support for the actual facility themselves,
they'll
right?
have
So let's say
words of
you
a
have,
plan, but will they have actually realistic executable plans?
and if you're a PepsiCo, you have a building and you have all your semis coming there. Are you going to have, mega packs? Are you going to have, solar panels? Who's going to do the maintenance and support? So yeah, it's a big deal. So let's talk stock again. Morgan Stanley's opinion about what they're doing here. So this they're now laying out their bull case of $500, and they think that that's now in play because Musk got into and entered into politics. So they just said this recently. Strong implications for Tesla's growth trajectory and valuation, potentially supporting a $500 bull case. Boy, these guys have really stretched themselves. Current price is around $350. Their price target is $310. That $500, that's a bull case.
What's the
But
time? Like, is that $500 in 12 months or?
I don't know. We'll take a look. There's a table I'm going to show shortly here. So they say that it's the Musk's political connections might expand Tesla's role in U.S. renewable and autonomous industrial complex. Based on our discussions, Tesla is very frequently excluded from potential passive expression in a portfolio due to its reliance on car sales for the bulk of revenue. What?
I think he's talking about all of your ESG based index funds, which comprise a lot of, overall market value. If you think about all your pension plans and, a lot of government directed investments that use these passive vehicles, right now Tesla probably does get excluded from those investments. If you've seen the way that they get treated by the BlackRock people, or just really any of the ones that rely heavily on the legacy ESG metrics, then
Yeah.
I think that's what he's saying there. I could be wrong.
Mm-hmm. Okay, they argued that Tesla's potential, similar to transformative moves made by companies like Nvidia and Apple and Amazon, might be underestimated. So Morgan Stanley outlines key assumptions supporting its 2030. There you go, 2030 $500 bull case. So they they expect Tesla stock to be $500 by 2030, and that's their bull case, which includes contributions from auto, energy, network services. Oh, this is hilarious. Their projections involve achieving 8 million car units sold annually by 2030. Fine. 400 gigawatt hours in deployed energy systems. Okay, fine. $146 per share from Tesla's network services, software services, and FSD. Ride sharing and third-party battery licenses, licensing as major growth drivers. So their $500 bull case excludes the humanoid bot. They speculate that each 1% of US labor potentially replaced by a humanoid bot could add around $100 per share. So let's take a quick look here. This is James Stevenson. So his point is that their note calling it Tesla a top pick and an overweight rating, but their price target is $310 next year. So again, just what the hell? What's going on? How does that happen? That's $40 below yesterday's close. And a bull case of, and you can't be serious, Adam. Again, seriously, $500 and a bear case of $100. Yeah, I'm not making that up. Here's a screenshot. So here's their bull case, $500, and 23.6 is their PE ratio times 2030 estimated earnings per share or earnings. So 8 million. Yeah. So basically, I won't repeat this, but you can see this is how they break it down. That's their bull case.
Yeah, it doesn't make a whole lot of sense, but I think that, people kind of understand at this point, at least your audience does, that their price target, Wall Street analysts, whatever their price target is, has a lot more to do with how the stock is trading than what they think the fundamental value is. And so it's not uncommon to see their research suggest it should be one thing, and then the target that they put on it look like something else. And I think it's because their client base will accept numbers that are close to the current value of the stock, and so they always have to peg whatever their target price is in some way to the current stock price.
Yeah.
Like you only are allowed to say that the
Hmm.
price is going to be this much above or this much below whatever today's price is, regardless
Hmm.
of the fundamentals of the business. Um, yeah, like it just doesn't make a whole lot of sense if you look at things more from a first principle standpoint and you place value on all the things that Adam Jonas says that he places value on.
Yeah. It's funny, isn't it? So let's pick a number 310 and then let's go, hey, base case, let's cut a couple hundred.
Well,
Bear case, let's remove $200.
yeah.
It's like perfect.
Well, and
Let's
and
come
to
up with our
James' point,
numbers to support that.
the thing that doesn't make sense is why do you call this an overweight rating
Yeah.
when you have a base case that is $40 below the current stock price? Like that should suggest that you have a neutral or a sell on. And so yeah, the combination of a price target that's below today's price target with an overweight rating is super weird.
Very weird. Well, we still like Morgan Stanley because at least they drop notes and they do very detailed analysis in their research and they show you what they're thinking about potentials for all these future businesses, which is what we retail analysts like. Then when it comes down to their stock predictions, they're very, very conservative and they're like,
Yeah.
screw all that. None of that matters.
Mm-hmm.
So,
Yep.
Okay. Thank you very much. This was a great note because there's just so many things that they touched on, even Tesla Semi, the politics and so forth. So thank you, Hans, for walking me through that, explaining, especially the bot. That was a little confusing what they were doing there. Follow Hans on his YouTube channel, Hans C. Nelson, and his X channel. And subscribe to him as well. Great guy, very smart, and has a lot of great insights. Thank you so much, Hans. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.